Hi everyone, I'm here to tell you should we invest 1 million ringgit in Maxis Sendirian Berhad. Now I will give you a short introduction about this company. The founder of Maxis Mobile Sendirian Berhad is Ananda Krishna, who is one of the richest man in Malaysia. Maxis Mobile Sendirian Berhad first started operations in 1995, is the leading telecommunications service provider in Malaysia. Maxis is the leader within the telecommunication industry and with that, is the fifth largest public company in Malaysia with over 6.4 million subscribers, providing a variety of innovative mobile, fixed and international services to their customers. With the evolution of technology over time, Maxis has taken this to their advantages as they are the first to bring the BlackBerry, iPhone, Galaxy Tab, Windows 7 and Android smartphones to Malaysia. Maxis got listed in the KLSE in 2009 and since then has declared interim dividends on a quarterly basis, and a final dividend in each financial year, thus providing cash returns to shareholders on a regular basis. In 2011, Maxis has declared or recommended dividends totaling RM3 billion to their shareholders. Maxis Mobile Sendirian Berhad core business is communication service provider. One other side business that they do is education as they provide scholarships to students to further their studies, mostly to those studying business and communication. So, let's see how is the company doing in the past 3 years. Maxis Mobile Sendirian Berhad current ratio increased from 0.06 in 2011 to 220.96 in 2012. And experienced decline in the following year resulted to 0.22 in 2013. An increase to current ratio in 2012 indicates good short-term financial strength. From the table, it indicates that the quick ratio of Maxis has increased from 0.06 times to 220.96 times in 2012 and gone through a massive decline to 0.22 in 2013. Despite the fact that both current ratio and quick ratio shows a big variation from year 2011 to 2013, this does not imply that Maxis is not performing well. Increase in current ratio over a period of time may suggest improved liquidity of the company or a more conservative approach to working capital management. As stated above, inventory turnover was shown 0 for 3 consecutive years. In this case, a low turnover does not indicate a bad sign as Maxis is a telecommunication service provider selling non-perishable items. Average age of inventory remains 0 in the past 3 years as Maxis is a telecommunication service provider selling non-perishable items. Maxis Mobile Sendirian Berhad is able to collect its payment within a day for the past 3 years even though it shows a slight decrease from 0.17 in 2011. 0.11 in 2012, to 0.08 in 2013. The total asset turnover increased from 0.06 in 2011 to 0.07 in 2012, and a slight decrease to 0.06 in 2013. As seen on the table above, Maxis experienced a slight increase of debt ratio from year 2011 to 2013. Due to the increment of ratios, it does not indicate that this company is not performing well as the ratios are well low below 1. Maxis times interest earned ratio increased from 0.17 in 2011 to 0.19 and 0.22 in 2012 and 2013. This shows an improvement of the ability to pay off its interests. Maxis maintains gross profit margin of 100% for 3 consecutive years from year 2011, 2012, to 2013. The increment of Maxis operating profit margin from 99% in 2011, 99.2% in 2012, to 98.9% in 2013 shows that the company has good cost control. By comparing the net profit margin for the past 3 years, there is a slight declining percentage from 90.6% in 2011, 89.7% in 2012, to 85% in 2013. This causes a declining performance and profitability levels. For every RM1 of common stock equity, Maxis Mobile Sendirian Berhad is able to earn RM189.20 in 2011, RM 78.18 in 2012, and RM 45.82 in 2013. As seen on the table above, Maxis experienced an increase in return on total assets of 5.87% in 2011 to 6.34% in 2012, followed by a decline to 4.82% in 2013. The return on equity of Maxis for the past 3 years increased significantly from 7.07% in 2011 to 7.87% in 2012 and experienced a decline to 6.17% in 2013. From the above ratio, it shows that the amount the investors are willing to pay for each ringgit of a firm's earnings increased significantly from 0.18, 0.32, followed by 0.51 from 2011, 2012, to 2013. Market or book ratio provides an assessment of how investors view the firm's performance. Therefore, as seen above, Maxis Mobile Sendirian Berhad market or book ratio increased from 0.01, 0.02, followed by 0.03 in 2011, 2012, followed by 2013. Despite the unrelenting competition, the underperformance Maxis is seen in the prepaid over the last 2 years, and that is changeable. Maxis growth is still enviable, although it is losing market share among the major mobile operators. Maxis posted a net profit of RM 472 million in the third quarter ended September 30, up 7% from RM 442 million a year ago. Maxis saw revenue increasing to RM 2.24 billion for that quarter from RM 2.22 billion in the same quarter a year ago. The company used to be great and now becoming average. We believe that Maxis is going to make it great again. After analyzing Maxis Sendirian Berhad financial ratios in the past 3 years, we found that out of the 16 financial ratios that we analyzed, there are 8 ratios showing an increase in performance. This shows an increment on the performance of the company, which we believe that Maxis will be able to provide strong returns to the shareholders in the following years to come. All in all, we recommend the shareholders to invest RM 1 million to Maxis Sendirian Berhad. Thank you for listening.